264,000, which is a small increase over the 262,000 that had been reported a week ago, still waiting for the revisions. The market had expected 259,000, so not a big change. And as I said, it's still way below where it was last three times we went into recessions, excluding the pandemic. 4-week moving average is, or actually not 4-week, the continuing claims number, 1,759,000. That's a drop. Oh, and last week's number, revision, 264. So no change at all when the numbers are revised, which is what happened last week. In other words, the claims market is telling us the labor market is still tight, backing up what Jay Powell said yesterday to members of the House.
I look, Mike, at the data coming out, and I guess we've got to prepare for next week as well. Jerome Powell it's a different set of questions today at the Senate, isn't it? What's the question we may want to lean forward and listen for today? Don't tell me it's a Denton company.
I'm not sure anybody in the Senate is as big a deadhead as some members of the House, but we'll find out. Now, the interesting thing about yesterday, Tom, was that it was much less political than a House hearing usually is. Clearly, the banking lobby had put a lot of questions to the members of the House because a lot of questions were on bank regulation and probably more than there were on monetary policy. But there weren't many of the don't you think Joe Biden is the worst person in the world kind of questions from the Republicans, and don't you think Republicans are terrible for the economy from Democrats. You usually get that at the House, and you didn't. So I'm not sure we'll see a whole big change today. Probably any news that was made yesterday, and the message was we're not done. We're going to raise rates, and the market took it as no change from what we went into this with.
Before we let you go, I am curious to put this all together. We've heard throughout today there is a hawkish tilt in a lot of the central banks, certainly over in Europe. People saying the U.S. is different, that inflation isn't as sticky as it is in Europe, that it's not going to surprise to the upside, that you are seeing a deterioration, and that it can be a soft landing. Is the data backing that up? Are we seeing some of the unemployment ticking higher with a softness and an ease that can lower inflation without having to materially cause some significant recession?
You're seeing 50-50. I mean, you saw the tremendous jump in housing starts this week, and yet we've seen consumer confidence a little bit stronger, not a whole lot. Retail sales are hanging in there, but they have slowed in general. So the overall economy in the U.S. is kind of in a middle spot. And I was telling somebody yesterday, you could get Neil Dutta in here, and you could get anyone, a number of doves, and you could have a nice food fight over whether the economy is going to do that. The thing that you're right about, Lisa, though, is that central banks are increasingly, they're going the same direction, but for divergent reasons. The U.S. has still got an inflation problem, but talking about slowing its rate process. England has an inflation problem that's really bad, and so they're talking about speeding it up. Norway today raised by 50 basis points because they're worried about their currency. The Swiss say they're almost done. The Chinese are cutting rates. So this is going to be an interesting time and divergence around the world, and we'll see where growth goes because of that.